Pickle in the middle. How's the COVID?
Dude, I'm just tired still.
Yeah.
I think I'm over it. I'm just still sleeping a lot.
That's the last phase, dude. That's what I think I'm finally out of that. What's happening, everybody? It's your boy, Chicago Sean McLaughlin, joined as always on the Flow Show with Steve Strazza. What's up, Steve-O?
How's it going, man?
Man, it's like white knuckle time over here, man. I didn't know I went to the amusement park, but boy, I've been riding some roller coasters the last couple of weeks, huh?
Yeah, I mean, it's getting exciting out here.
It's getting exciting. That's one way of putting it. That's your flavor.
Yeah, markets are a mess. We actually have a decent amount of bearish flow on the list this week, so that makes sense.
Hey, that's new.
Right. I think we were complaining about how that wasn't the case just a week or two ago. I mean, again, I think you want to be careful with a lot of these. One that stands out that I know we mentioned just off camera is the iShares China Large Cap ETF, FXI, with some bearish flow. But, I was just looking at the chart, and I could throw it up here. It's actually, China's been holding up better than a lot of other countries, over the very near term. We still haven't taken out those lows from March, which, if you look at any other index, really, I mean, here's the S&P, that's not the case. We're already below those levels. So,
right.
I don't love it.
You're talking about increased bearish options flow here in some of these names. And if you want to bring that FXI back up again,
yeah.
I mean, to me, it reeks of, is this like just last ditch desperation? People trying to protect themselves against any further declines, or is this a way of them throwing in the towel in some way?
I mean, it would make sense. I think the put to call ratio is finally at some elevated levels, which it wasn't up until I think just late last week. So I think we're at that part of the cycle where things are getting pretty ugly. Probably going to see a lot more put buying, right? Right.
Well, to that point, I'm going to bring up on my screen here, I'm going to bring up the Vix chart. Vix is obviously elevated. It's at or near the highest levels we've been at all year. But I don't know, man. Like, I feel like the way that the narrative is out there, the way people are talking online, the blog posts, all the smart analysts that you and I know that we read, I feel like there's a lot of people that are pretty dang bearish here, but Vix is just, I don't know. I feel like Vix should be higher. Is there a pop coming, or is the Vix trying to tell everybody, hey, it's not as bad as it seems? And I don't have the answer there. I'm asking that out loud. I don't know.
Right. I think, a good way to look at it is all year the VIX has been under 40. Like the upper range has been, 38. It can't take those highs out. It seems like things are a lot more volatile right now than they were earlier in the year, but the VIX is still kind of in that same range. Does seem a little bit odd.
Right. If I did not know where VIX was right now, and I just walked in today, having just had a long weekend and catching up on what's been going on in the markets, and someone asked me, where do you think VIX is right now? In my head, I'd be like, oh, we're probably in the low 40s, mid 40s right now. That would have been my guess.
Yeah. So basically when you see all these stock market indexes, sector indexes, the major averages, both in the US and abroad, all resolving lower from their ranges, right? You would think the VIX should resolve higher from its range. Not seeing it yet. That would be kind of confirmation for a lot of the breakdowns that we're seeing, in my opinion.
Yeah. So, I just kind of chalk this all up to, at least for me, Strazza, just a lot of confusion, because I could see both cases playing out. I could see VIX, we're on the cusp of a major breakout in VIX here, up into the 40s, really scaring the hell out of everybody. I could totally see that happening. On the flip side, I'm like, okay, well, the VIX is maybe just telling us something, and it's not as bad as everyone is making it out to seem. And maybe we should all just take a step back and chill out and not get aggressive here, but at least let's cool it with the panic and let the market just settle for a little bit.
I think at this point, I was looking at some rate of change indicators, very basic momentum indicators, 3-day rate of change, 4-day rate of change. Some of these growthier areas, whether it's ARC or the IPO index, never sold off, in this fashion before. And then when you look at the bond market too, I think a big part of that trade is interest rates won't stop going up, right? It's putting pressure on growth stocks. When you look at bonds, I have them up here, long-term treasury bonds, testing those 2018 lows. We talk about like the 2018 highs a lot in risk assets. If bonds can kind of find their footing here, then you would think pressure comes off the market, probably going to get some sort of mean reversion. So not a great place to press shorts, in my opinion, in the weak areas or some of the stronger areas.
Right. Well, today or this morning, you, me, and JC were talking during the Twitter Spaces about volatility, the volatility that we're seeing, just like in ETFs across the board. And boy, when I look at my list of ETFs, or at least this morning, things have changed a little bit because the stock market has rallied a little bit. Things have cooled off, but man, almost across the board, every major ETF that we watch is in the pushing the upper limits of its implied volatility range for the year. So there's a lot of premium out there, a lot of fear, which again confuses me because in this environment, I would expect VIX to be way higher because all the ETFs are at the upper end of their volatility ranges for the year. But as an options trader, my every bone in my body says that we just need to be selling premium here. Now, we don't want to be irresponsible and just, over leverage and sell everything and get big. That's, I'm actually reading the book right now, When Genius Failed, the whole story about the long-term capital management blow up. So it feels very fresh at the moment right now as markets are selling off. And the last thing you want to do is get large into the abyss or into the unknown. But odds do favor tactical selling of options premiums here. If you could find your spots, if you could pick your spots, if you see some levels that you're going to stick to, which is a big part of it. What
did you guys sell premium in this morning?
We sold premium in XRT, the retailer ETF, and look, that when you look at the chart, I just pulled up the chart here on my screen. It definitely has a feel of buying the dip here, but that's not the goal. It's just that at the time when we put the trade on, this was the ETF that had the largest, implied volatility ranking of the ones that I follow. We sold the 60 puts down below, and then we sold I think it was 85 calls up above. So we got a lot of room, which is the nice thing when premiums are high and you're selling premium. That gives you a much wider margin for error. But as we know, and as we've seen time and time again, when volatility increases, instruments move a lot further and a lot faster than you thought they might.
So is this basically what you're seeing in most ETFs on the list is, the blue line in the bottom pane, that's the implied volatility. We're at the upper end of the range it's been in, I guess, all year. That's
right. If you zoom in on the last 6 months, you're seeing almost across the board implied volatility up near the top. I'll just randomly pick some up here. So we got the XLU utilities. Okay, not at the highest, but certainly high. Let's see, XLY, the consumer discretionary. Look at that, up near the top. What are some other energy? I'm just randomly picking these out. I'm not cherry picking. Energy, right up there near the top. It's across the board. XLK technology. Look at that. Right up there near the top. And this is a common refrain. I think we were looking this morning that really the only ETFs that did not have super high implied volatility were gold. And I wouldn't call that cheap, but it's way off its highs from earlier in the year. Yeah. Let's see, SLV, same thing. It's not cheap, but well off the highs from 3 months ago.
Metals look terrible.
And those are really the only ones that, and by the way, you look at that silver chart and I'm looking at that sell-off and making new lows. I'm thinking, why is vol so cheap? It should be more. Should be higher.
Yeah. How about XLF? XLF was actually on our list this week. Had some bullish flow.
XLF with some bullish flow. So we got some people, sticking their necks out, thinking that the higher interest rates are bullish for the banks. Is that it?
Yeah, they haven't been. So that would be a change of character. But no, they're making a bet on, I guess, a little bull hook here because this range is resolving lower. So if you're buying XLF here, you're betting on, buyers coming out and making a save here pretty much immediately.
What did you call that? Did you call that a bull hook?
Bull hook, yeah.
What is that? What page of the CMT manual can I find bullhook on?
I think we made that one up. I think we made that one up. A little scoop. Sure.
I like it. I like it. Bullhook scoop. All right. Okay. Stick saving a beauty. That's what I like to say.
Quick little failed move, a little whipsaw, and then back into the range type of thing. That's what you're getting here, or at least that's what you're betting on here if you're buying XLF.
Right on. All right. Well, do me a favor. Bring your chart back up of the unusual options flow, and let's just kind of end there. I mean, was there anything on that list that stood out to you as somebody making a smart bet here, or is it like the way I'm thinking? I'm thinking a lot of these are just defensive moves.
Yeah, that's probably the case. One that would stand out from I think an area of the market where you could wade into right now, defensive stocks. So Colgate Palmolive, I know we were joking earlier today about cereal stocks. Not exactly a cereal stock, called a toothpaste stock maybe. So same kind of sector there, CL.
Yeah, I mean, our friend the Fly calls these old man stocks.
I mean, this one doesn't look as good as some of the other old man stocks. Really kind of a nasty range. But these are the kinds of stocks that have been working, these grocery store stocks, these staples. So
Kellogg's, so Kroger. What's Kroger doing? Well, Kroger's come back a little bit.
That's got a wild chart. Kellogg had a really nice move last week and yesterday.
Yeah, same with Campbell Soup, CPB.
Yeah.
Wow,
So,
big givebacks today though.
Post looks like it's breaking out. That's another cereal one.
What's that symbol? Just Post. It's not Post Holdings, is it?
Yeah, Post Holdings. Yep.
It is. I thought that was a real estate company.
No.
Okay. All right. Well, Strazza, let's wrap it up here. It's been a wild week. It's been a couple of weeks here. There appear to be no signs of stopping as long as VIX is hanging up where it is. It's going to be a white knuckle ride here for a little while longer here, and that's not necessarily a bad thing for options traders if we're smart about selling premium. But I think the takeaway from what we're seeing from the latest Follow the Flow report is that we're seeing a lot of unusual options activity, but most of it smells of defensive action. No one's really, as far as I can tell, nothing looks highly speculative here, which makes sense. I don't feel like this is an environment that is welcoming to people who are willing to make aggressively speculative bets.
And that's what I would say, right? Like, it doesn't matter what really kind of shows up on this list. In this environment, support levels are just getting violated, with no regard whatsoever. Breakdowns left and right. We're seeing downside resolution after downside resolution. All of these, consolidations are turning out to be distribution formations and tops. So it's nothing that I'm going to see from the unusual options activity is going to make me feel overly bullish with that kind of price action, in the background. So I think it's a good time to just sit on your hands, right?
Yep. Well, look, if you're a long-term investor, just remember it's always darkest before the dawn. We'll get through this. I'm not saying we're near the bottom, or I'm not saying we're turning around this week, but hey, we'll get through this. Hang tight. Manage your levels, manage your risk. Don't be too aggressive in this environment. You're not going to get, I don't feel like you're going to get paid worth the risk you'll take to be aggressive in this market. So stay nimble, stay small, sell premium if you're an options trader like us, and pick your spots. That's all I got for you. Strazza, thanks for joining, buddy. I'll see you tomorrow.
All right. Sounds good.
Take care, everybody.
Bye.